Hey, hey, welcome to another episode of our Facebook Live. Hey, this is Dr. Noah Liu. I know we've been gone for a week, but we are back here again with Tom, Bibby Varghese, my partner and buddy. We've been doing some other deals, but today we are going to be talking about a post that was recently put up with this anonymous member about I have some money left over. What should I invest in? So, without further ado, Tom, I'm going to pass it off to you, man. Let's kick it off.
All right, excited about this. Hello, everybody. So excited for another episode here. We are going to talk about some very, very interesting things today about investing. My
Hmm.
name is Tom Bibby Varghese. I'm a partner of Dr. Noah Lu, and we are the admins of this group. And thank you for tuning in today. We just provide you with advice free of cost. There's nothing to sell here. It's just for the benefit of everybody. And we talk about this every week and give you some nuggets that you can take action. Today, by the way, my story is I'm an entrepreneur. I started investing in real estate about 5 years ago and accumulated a bunch of properties, and I'm enjoying the cash flow right now. And that's exactly what we talk about, how you can build up some passive income streams and never depend on one income stream, right? So
Hmm.
today, we somebody asked a question saying, I've got $500,000 sitting around, and what should I do with it? He had some options that he listed there. We'll go about that. But first of all, congratulations on saving up that much money. A lot of people just spend it on different liabilities, and this person, this individual, was able to save up $500,000. So that's a good chunk of money. And let's talk about what are we going to do with that if it was us, right?
100%. The key is you don't want to let the money sit at the bank. You don't want to let the money rot. We want to make it work for us. And when we say work for us, how do we earn, save, multiply, right? And
Yep.
that's what the topic is going to be about today. So we identified three things that we can actually take that money and utilize it. And now, again, it depends on the person's risk appetite, how much they want to invest, and how long do they want to invest and let that money stay in. So those are some of the key criteria that I would say somebody needs to answer. So, Tom, let's talk about what did we say about those three things which you and I we were talking about before this. We
Yeah,
would
and
invest in.
also you touched on something important, right? What you want to multiply your money. That's the goal, right?
Mm-hmm.
So let's start with your goal in mind. Some people are like, I'm just going to keep piling money. I'm just going to be working for another 10, 15 years. So some people are like, I'm going to retire in 5 years. Some
Sure.
people may be like, I just want this to be my nest egg that I'm going to pass on to my kids. So it all starts with a goal in mind. But we are just going to generalize it for a little bit here and talk about three things that we think they can invest in. Right. So first of all, obviously, what comes to my everybody's mind is stocks. It's easy to get in and easy to get out. Liquidity is like paramount. There's nothing as liquid as stocks
Mm-hmm.
after bank accounts. Right. So and the stock market has been on a tear, and there was a huge drop when the tariffs was announced, but it's back up now. So that's the situation with the stock market. Did you, Noel? Did you want to say anything about the stock market situation?
Look,
I mean,
it's a
yeah,
volatile.
investing in stocks, basically. I
Yeah,
mean,
yeah. It's a volatile market, right? Not as volatile as your cryptos, but it's still a volatile market. What I would like to say is, if you're going to do stocks, maybe if I was going to do stocks, I wouldn't do in a certain company. I would probably do it like spread them out, like a long-term S&P 500 kind of deal.
yeah,
I
like
like
an
to play
index,
safe.
like
Index
an
fund, right?
index fund. So invest in an
Mm-hmm.
index fund. So again, it depends on your risk appetite too.
Right.
So if your goal is like fast growth, you have to take risk. But if you don't want to take risk and you don't mind growing it slowly, I mean, there are like S&P 500. Even S&P 500 took a big hit when the
Right.
tariffs were announced and all that stuff. So it's not like S&P 500 is insulated from stuff, the shocks.
Mm-hmm.
So the thing with stocks is the liquidity is great, but you also get returns when you take in a long period of time. Like if you buy individual stocks, make sure you're buying solid companies that is producing a profit. Don't go and buy companies that say, hey man, we have a great product and in 3 years we're going to make money, right? That's basically like going to Vegas and gambling your money.
Right.
You may win. I'm not saying you're not going to win. You may win, but it's a risk. You worked hard. I've done some mistakes in my past life like that. That's what I'm telling you. You worked hard for your money. You don't want to just gamble away, right? But if you buy a solid companies that's already generating a ton of cash and making a profit,
Mm-hmm.
you know, there may be some bumps along the way, but it's going to come up, so
100%.
that's the thing with stocks.
And you know what? Just follow what the big boys are doing. Like, right? So big boys meaning they would actually invest in, like you said, long-term stable markets and not
Yeah.
going like up and down and following the trends. The other thing too is this is what I would do first. With that cash out there, I would go ahead and maximize all my retirement accounts first. If I
Yeah,
can, if
great
I
point.
haven't done that, right? So I
Yeah.
would do that first, put into Roth if you're eligible for Roth, put into IRA, put into whatever, like you can maximize that. And then you can take that and remaining of that, you can take a portion of it and put it in an index fund or in one of those companies where you said. So that is one stock market, right? What about crypto, man? What do you think? I would not even go
I,
near
I
that.
would I would stay away from crypto. I
Right.
mean, yeah, if you want to put, I don't know, some
It's up
money
to
in
you. Yeah, it's up to you. I
Bitcoin
would
or
stay away.
something.
We
Yeah,
would just leave that out. Yeah.
yeah.
So let's talk about the second one. The second one, which is our favorite. Let's talk about real estate.
Real estate.
Oh, by the way, one thing before we end the stock part: any dividend, any gains, it's taxed at regular income.
Yeah. Yeah, that's a great point. Like in terms of stocks, right? A lot of
Yeah.
people are like, "Man, I'm going to buy the stock when it goes up $20. I'm going to sell it,
Mm-hmm.
sit on." But man, I'm telling you, if you sell it within 12 months, you're going to pay huge capital gains tax. And then
Right.
you reinvest that money, you make more money. You're going to keep on piling up capital gains tax at
Mm-hmm.
the same rate of your income tax. So you're really not, at the end of the day, you're really not making that much money as you think you are. But if you're
Exactly.
holding for the long term, which is over a year, over 12 months, and if you sell, then you get a break in taxes. But like Noel said, you need to maximize your retirement accounts, especially Roth, if you're eligible for that, or do a
Right.
backdoor Roth, because that grows tax free. So when you take it out, there's no tax on that if it's a Roth. So that's the problem with stocks. Now, real estate. Yeah, let's talk about real estate. What would you recommend, Dr. Noel?
Man, real estate. Couple of questions. Do you want to run the deal yourself, or do you want to be a passive investor? That's number one. If we have a main thing first, let's talk about the main thing first, right? Let's invest in that first. But if you got money left over, you want to be the active person, you want to run the deal, you want to be the property manager, absolutely, go for it. Um, I mean, what do you say? Like, buddy up with
The,
somebody, and
Yeah, I mean, if they want to run the deal themselves, that's okay too. But just keep in mind that you're going to get calls about things that need to be fixed, and you will have to manage it yourself, which means time taken away from your practice,
right.
which is where you're making the most money, time from your family, time from other things that you can do. But if you want to hire a property manager, think about that the cost that you'll have to pay a property
Mm-hmm.
manager. So those are the downsides of handling it yourself, right? But it's still doable. You can partner up with somebody, find a trustworthy partner who knows what they're doing, who is doing this for a living, who has a proven track record,
Right.
and join them and do a joint venture or something and have everything written down before you get into any partnership so there is no
Mm-hmm.
cause for confusion later on.
Or the best thing, and we've seen also happen is a lot of times you can buy a deal, and you can actually go and hire a property manager or maybe like a maintenance person and give that person a share of the equity, right?
Yeah, great
Um,
point. Yeah.
give them a share of the equity, give them a small percentage, like maybe a 10% or maybe 8%, 12%, depending on what your appetite is. Do that. This way, you won't have to shell out with that much on the monthly payment to that guy or gal or whoever it is. And they'll have, a portion of the equity upon a refi or a sale. They will make some money out of that. And this way, that person will be really vested in taking care of the deal
Yep,
if you
absolutely.
don't have the
Yeah,
time.
that's a great point. You need to have somebody like that. I mean, they have to have some skin in the game, so they will view their
Hmm.
property as themselves, and they're getting an equity, so they will do their job. So definitely real estate. And some people were
Yeah,
mentioning do syndications and stuff. What are your thoughts
syndications.
on that? What are your thoughts on that?
Well, syndications are good. Again, it like we always say, you have to bet on the jockey. We need to know, have a good relationship with a trustworthy person. Number one, like you said, have a good track record, and number three, it's like where are they? Where are how much skin in the game do they have? Like, are they putting in their own money? Do these
Hmm.
guys have any kind of like net worth behind them?
Yeah.
So these are some of those things that you need to look for. Or take that money, partner with a buddy or 4 or 5 buddies, and just make a JV deal, like a joint venture deal, and everybody go into a deal, right?
Yep.
Like the deal that I was talking to you about, strip mall plaza having a retail center,
Yeah, yeah, exactly.
right?
That's a great one for this, actually. That's well, just talk a little bit about that. So,
So the
um,
whole concept, that I'm coming up with is, we have a property, we have a land, get a land ready. I have my dental offices and have one of the locations in that strip plaza there. I'll occupy about, let's say, 3,000 square feet. We'll have the remaining 12,000 square feet available for rent. Everybody pitch in, everybody is a JV partner. We all own the real estate. And by the time we actually get them stabilized and get them refied or sell, everybody makes their money back and more.
so
So
basically, the risk is kind of eliminated because you're going to be one of the tenants there, right?
I'll be one of the
You're off.
tenants there. And before we even start like groundwork or any of that stuff, we'll try to get those tenants lined up, right?
Yep.
There are
You
agencies out
you had
there.
shown me a location recently, which you want to say something about that? It was a great location, right?
Oh, absolutely. That location is in Hammond, Indiana. It's like the Northwest Indiana region. It's right off Highway 80. Um, it's a great, great location. A lot
And
of the migration
you have your practice across the
across the
street, you said?
street. Yeah, across the street. And what's happening with that area is a lot of migration from Illinois, all from Chicago area. They're all moving in that area. Why?
Mm.
Because of jobs. You know, it's a tax-friendly state, and the money they save on property taxes, it's insane compared to Illinois. So lots of reasons why people want to move out there. Lots of reasons why people want to work there, and lots of reasons why people want to live there. So it's a great location, and that's one of those examples that I'm talking about. Real estate. How do you buddy up, and how do you joint venture with somebody, right? Or
Yeah.
the third option is you go buy a duplex or a single or something and just Airbnb it, or long term or midterm rentals. So that's
Or
another
if
way you
they're
can do it.
starting out as if they have never bought a house, that could be your first house. You stay in one
That
of
could be
them
the
and then
first
rent the
house.
other ones. Yeah.
And we spoke about that house hack, right? If there are
Yeah.
four, if there are four units, occupy one of them, owner occupied. It still gets qualified for a low down payment. Rent out the other three, get the rents, and basically you run it under an LLC, and that is a house hack.
Yep, absolutely. Yeah, that's something that you but at the end of the day, real estate is something that all the millionaires use to build wealth. See, when you go buy real estate, so with 500,000, you can buy $2 million worth of real estate. And
Mm-hmm.
the appreciation in 5 years is not going to be on your 500,000. It's going to be on that $2 million. So if it went up, let's say 30%, that's going to be worth $2.6 million in 5 years, for
Right.
example. And so you doubled your money, right, in 5 years, and which is pretty good. And then you're getting cash flow every month too. So that's the benefit of owning real estate. Now, I know some people who were sitting on a bunch of cash, and they saw somebody pitching some courses, and they went and spent 50 grand on the course and never ended up buying. I think they spent even more, but never ended up owning any real estate because they were consuming course after course. What would you say about that?
Y- y- here's the thing, man. Here's the thing. Would you rather go with a person who's done deals, or would you rather go with a person who's just studied about deals, right?
Yeah.
Um,
But we're not talking about we're not you need to have some mentor. That's a great thing, but don't just go consuming course after course and not doing deals, right? So that's what we're talking about, and especially when it's like crazy expensive, you got to be careful about doing your due diligence. That's all.
at the end of the day, execute and take action.
Yeah.
right? That's what you got to do. And like Tom said, take the course, get educated, know your stuff, but then again, don't overanalyze it, don't overthink it. Go in and take action, get it done.
Yeah.
Worst case scenario, again, everybody's afraid to do that is because they are trying to be risk averse. And when you
Yeah.
try to do that, a lot of times you play safe, you're not going to get there where you want to be, right?
Great point. Yeah.
Cool, man. So the last one is my favorite one, man. Investing in businesses.
Hmm.
Um,
I
all I'm going to
love it
say,
too,
I'm going to
man. I love
start
it.
with this is before you invest in any other business, invest in your own business first,
1000%.
right? So let's talk about that, Tom. Um, Pros and cons.
Yeah, pros and cons. I mean, if you have your own business and you know how to scale it, I mean, you got to have you have to figure out a way to scale your business, right? So when it comes to dental office scaling, we have the expert sitting right here, Dr. Noah
Yeah.
Liu. You can talk to him about how you can scale your practice. Okay, so you gotta invest in your practice, scale it, and get it to a level where you know how, if I put more money into
Mm-hmm.
this, it's going to grow. It's not like, oh, I'm going to put a new board out there and or something like that. You need to know, if I invest $10, I'm going to get $20 back. If you have figured that out, you need to invest in your business first, and we're not saying all the money. Then you have did you have any thoughts on that, investing in your, you definitely have some thoughts on that, so
Yeah, man. Yeah. I mean, a lot of times people will be like, so what do I invest in my own business? What do I take? So investment does not really have to be something physical. You can invest in training. That's number
Mm,
one in your own business. You can invest in your staffing, your people, get them better. You can invest in systems, in processes. These are some of those items which you may not see.
marketing. Mm,
Marketing. There you go. I
mm,
love it. I love it. And this is how you will be able to get leads and patients and everything else. But they all kind of go hand in hand. It's not like one size fits all. It's not like you put all the money in one area and then neglect the other area. Once you invest in business, you have to start thinking about marketing, operations. How do I invest in HR? How do I invest in uh, financing? Like, who do I get? A lot of times people like to cheap out on the CPAs, and that's the worst
mm,
idea, right?
right.
And how do I invest in the best legal team that I can get that money can buy, right? I always like to joke around is like, get a legal team that you cannot afford, because
Mm,
that is the kind of people that's going to help you, save you from problems. Same thing with tax attorneys, same thing with
mm,
CPAs. Invest in systems, invest in education, invest in everything that you can think of, and then finally invest in the physical aspect, which is your locations, which is your your team members, which is adding people. And I think that's what's going to get you to your next level in your own business. So that's where some of those money you can take in and invest it in areas. It's
right.
not only taking and investing it in a dental chair or in an op room or something like that, or in an equipment. It has to be in stuff that you're not able to see at that time, but it will pay off in the long term.
Absolutely. Great point, man. Those are great points. Yeah, absolutely. You got to invest in your business. That'll take it to the
Hmm.
next level. And if you have already done that, you can also think about investing in other businesses,
Yes.
sorry, buying other businesses or investing in them. Right. So, some people were saying, liquor store. I think that person mentioned buying a liquor store or a gas station or something like that. So here are my thoughts on the liquor store situation. Is that the problem with these kind of things is it's pretty a lot of these are owned by mom and pop. So, and they are making profit. So when they send you the numbers, that does not account for a manager or anything like that. They're saying, okay, you
Hmm.
can buy this liquor store for 500K and I'm making 200,000 in profits. But guess what? The guy who is owning the mom and pop, they are at the store 24/7,
Right.
or and they are running the show. You don't have that time. So that's the only challenge with buying liquor stores and things like that.
100%. 100%.
Yeah.
I was just thinking about a business that was a really cool idea. Coin laundry.
Yep. Hmm.
I've seen guys, man, they made it really, really good. Like buying all these mom and pop coin laundry and then just consolidating all of
They
them is a
consolidated, right? Yeah, and they
yeah.
hire a manager who goes around and collects the cash.
You need just a person sitting there just to pick up the dry clean, drop off, like people dropping in and out, and
Yeah.
a team maybe in the back, and that's it. Pretty much, it's just like coin laundry, just running itself.
Some of them are even fully automated to the point that I don't even
Yeah.
see anybody there, and they're pretty massive, like huge rows of washer and dryer
Hmm.
sitting around. So I mean, just make sure that you don't have to be involved as much. Any business that you
Correct.
buy. Again, this is another area where you can partner up if there's a
Partner
trustworthy
up,
person.
partner
Yeah.
up. Another
The good
great
thing
one.
about yeah, go
Yeah,
ahead.
yeah, yeah, yeah. No, go for it. Go for it. Let's
the
talk
the
about that.
good thing about buying businesses is your return is going to be great. It's going to be amazing. It's
Yes.
better than stocks. It's better than real estate because you have a good amount of control on these businesses. If you don't own it fully, you have a certain level of control, which means I mean you're talking like 2x 3x returns
Hmm.
pretty fast.
And if you are one of those people that's a retired professional, let's say a medical doctor or a dentist, invest in another dental office, right? With
Mm,
somebody, partner up with
great
somebody,
point. Yeah.
right? Partner with somebody, partner
I
up with a
mean,
new
you can
dentist.
still invest even if they're not retired, right? They can still do that,
Oh
right?
yeah, yeah, yeah,
Yeah.
yeah. Absolutely, absolutely. Like let's say if somebody who's looking for an investor, like an angel investor, not necessarily a startup, but they want to scale. They want to scale beyond 5, beyond 10, beyond 15 practices. Be that investor, right? Be that investor, buddy up with somebody rather
Yeah.
than that person going to a strategic DSO partner or maybe like going to a private equity. The group of dentists, buddy up and let's take it to the next level. So
Yeah,
there's
I'll give you
so
an
many
idea.
different ways.
Yeah, I'll give you an idea that recently somebody told me about. Okay. I
Yeah,
met this
yeah, let's share it.
oral surgeon. So he's very successful. He's got, I think, two locations that he's running by himself.
Hmm.
And then he said, I found another oral surgeon who just, I don't know, I mean, he wanted to go out on his own, start the practice, but he didn't have the money. So what he did was he opened up another location and he made that guy 50% partner or something like that, a certain amount of partnership. And this guy put all the money in, the
Okay.
first oral surgeon, and the second guy is running everything. And I think they share 50-50 or something. But this guy hardly shows up there. It's all managed by the
Yeah.
second guy. So that's another option too.
And the way I'm going to go a little bit more detail, somebody might be thinking about, okay, so if that guy put up all the money, this guy's putting in all the work, why would he get 50%, right? That's not how
Mhm.
it works. The guy who is putting in all the work, he still gets his money. He still gets paid as a doctor, right? Depending on what they
Mhm.
settle at.
Yeah.
Whatever's left over after all the expenses, that cash flow that's left over after paying the debt service, which is the principal and the interest, that's split between half and half.
Yep. Mm.
Okay, so
Correct.
so
Yeah.
just for
Yeah.
somebody who's like thinking, right, like, hey man, why is he getting 50%,
Yeah.
right?
Yeah, exactly. Good, good. Yeah, these were some amazing topics, right? So we talked about investing in stocks, investing in real estate, and investing in business, which is your
Hmm.
own business first, and then buying up or investing in other businesses. So amazing, man. These are some great things that we shared today.
Yeah, good deal. And if you guys have any other topic in mind, definitely, reach us out or just put in the comments. We'll be more than happy to discuss. And like we always say, if we don't have the answers, we have a network, a huge network of real estate investors. We can always tap into their knowledge and bring it down to this group. All
Cool.
righty. With that being said, let's land the plane, Tom.
Yep. All
Everybody,
right,
yep.
everybody. Thank you for tuning in. And if you have any questions, comment, message us. As always, have a great weekend.